Hey guys, it's Derek and Lindsay. It's another election year, which means there's a lot of market volatility and a lot of questions about investments. In this video, we're going to talk about 4 things to help guide you through your investment making decisions.
First things first, let's all take a collective breath. Let's relax. Let's not hit that sell or buy button. The news is all over the place, which isn't helping with the volatility. So we're here to help ground you into, like Lindsay said, 4 key principles that will help ease your mind. Now, before we get started, many of you know I build algorithms for a living, so help us out with the YouTube algorithm. We need you to smash that like button, leave any comment down below. We read all of them and would love to hear your investment comments or any questions that you have, and make sure to hit that subscribe button too. One more disclaimer, past performance is no guarantee of future performance.
Let's get started. The first thing we're going to talk about is understanding historical trends. Now, there's a lot going on during any election year, and this year is no different, especially given the pandemic environment. But it's important to understand historical trends because it can give us some level of predictability because elections are repeatable events and we can see what has happened over time. This is to help to ease our anxiety so we're not so bogged down in how much risk we're giving ourselves during this specific time.
Expect some day-to-day volatility. Now, if you're the type of person that reads a headline, makes a purchase decision based off of that, we recommend during this time that you set an auto investment that aligns with your strategy, and during the election time, don't look at your investment. If you remember the election night of 2016, if you're a nerd like me, you probably will, the futures for the stock market were down 5%. There's enormous volatility in the events that were going on at that time. Now, fast forward 24 hours, the market closed up 1%. So the point that we're making here is you can't time the market and expect some volatility day to day. Keep the long-term perspective in mind.
This next historical trend may sound crazy, but the markets actually tend to ignore elections. That's not to say that the media or the talking heads ignore elections when it comes to the market. They definitely report on every little volatility and upswing and how it coincides with the news of the day. But we know that over time, these trends are pretty consistent. Let's look at the data that proves this point. We can see from January 1st, 1964 to December 31st, 2019, so just the end of last year, the S&P 500 index annualized volatility was 13.8%, and in the 100 days both before and after a presidential election, which was lower than 15.7%, annualized volatility for the full time period.
The data clearly shows that there's a little bit more volatility outside of the 100 days before and after an election. During those times, like we mentioned, expect some volatility, but don't expect as much as the news is trying to convince you on. Vanguard sums it up best by saying, the bottom line, elections are another one of those events that generate lots of headlines, but that should not sway you from following the financial plan. It's understandable to have concerns about the election, but as far as your portfolio and the markets are concerned, history suggests it will be a non-issue. Principle number 2, there's 4 common mistakes that are made every election year. Don't worry about which party may potentially crash the stock market. The historical data simply does not support that any party, regardless of who wins, is going to cause the market to crash.
If we look at this chart, we can see from the time of Calvin Coolidge all the way up until today that there has been consistent growth even when there has been some dips in the market. If you invested $1 in the time of Calvin Coolidge, today it would be worth $10,000. Another common mistake that investors make is they read too much into headlines and the day-to-day market volatility. And we know that market volatility is going to happen because historical data proves it, especially now with how quickly news is spread and how fast it affects the market, basically in real time. If you keep our long-term investment strategy, it will pay off over the long term. Even if markets go down prior to an election, historically it shows that shortly after elections, markets still go up, regardless of who wins.
The third mistake that investors commonly make during elections is they try to time the market. Don't do it, seriously. We see historically from 1992 to 2019 that investors pile into cash and then after the election spread out back to their investment goal. This is a poor strategy with a high probability of losing money and causing unnecessary taxable events if the movement is done outside of the tax sheltered account.
The fourth common mistake that investors fall into is herd mentality. If you feel like you're doing something different than everybody else, that's normal. You're supposed to be doing goals that align with your timeline and with your needs. For example, if everybody is all of a sudden buying up toilet paper, And you're just thinking, why do I need to buy toilet paper? But everybody else is buying toilet paper, so I guess I need to buy toilet paper too. That's herd mentality. Now we're gonna give you tons of great investment guidance, which we wanna differentiate between investment advice. Because when you're thinking about guidance, it's more like we wanna teach you to fish rather than just hand you the fish.
This leads to the point of, would an investment that we are doing be a good investment for you? If we are making money on it, wouldn't you make money on it too? The simple answer is yes, but we're trying to stress the fact that you need to get out of the mindset of, I just need to make money, and change that to the mindset of, I need to make money for, and fill in the blank. Is that for retirement, for a house, for a car, for children, etc.? Again, fill in the blank. The idea is to have a long-term perspective and an achievable goal that you will use that money for. This will ultimately help guide your investment strategy.
The third point we want to stress when it comes to investing during election times is to keep your long-term goals. Now at this point you're probably thinking, well, Lindsay, Derek, what am I supposed to be doing with my money? You're supposed to be doing the same thing you've been doing and keeping the eye on the prize, which is that long-term retirement goal.
Now, if you're a new investor and you don't have these things established, check out our channel. We're going to get into a lot more details on how to invest and the specifics of it. But to keep this one short, just know that you need to keep your goals or learn how to set them.
The bottom line is whether a Democrat wins or a Republican wins in an election year, the markets will continue to trend upward according to historical data. During these election times, keep focused on those long-term goals, keep auto payments going into your retirement accounts, and just stay focused on the long haul. Do not try to time the market during volatile times.
The fourth and final point we want to make is stay diversified. Staying diversified is critical to being a successful long-term investor. You need to be diversified in appropriate balance between stocks and bonds, and then break those categories down even further. This video we won't go into that detail, but we do recommend that you learn to be disciplined, understand what historically has happened to help you understand what may happen in the future, despite the short-run uncertainties of events such as an election. If you want to become a successful investor, you need to learn about the things that you can control and let your emotions take a back seat. You need to learn to be disciplined, have a financial plan, set perspectives and timelines that you want to accomplish, and then don't let events like an election control your investment strategy.